Jitters in the banking sector are taking a back seat because Wall Street is sitting on the sidelines of the Fed's policy meeting. The day before the crucial event is going to be optimistic. Investors dispelled fears, revised forecasts, and again invested their funds in the stock market. Still, investors' nerves are on edge. So any aggressive news on the financial sector is able to change market sentiment. Wall Street indexes surged on a Monday in the light of the news on the rescue of Credit Suisse and amid the efforts of central banks to reinforce public trust in the financial sector. Despite early pessimism and the turbulent weekend, investors found some relief in the measures by the major central banks and again shifted focus to risky assets. As a result, the benchmark indexes opened the week with the confidence gains. Remarkably, the Dow Jones recouped losses incurred on a Friday and rebounded by 382 points or 1.2%. The Nasdaq climbed by 0.39% and the S&P 500 rose by 0.89% to close at 3,950 points. Wall Street indexes gained ground in the New York pre-market. Futures on the stock indexes grew 0.8 and 1.2%, signaling the optimistic opening. The S&P 500 is expected to trade in the intraday corridor between 3,910 and 4,020 points. Yesterday, the S&P 500 snapped a losing streak and recovered by 0.6%, beside the regional banking index jumped by 1.5%, having rebounded after sharp losses last week. The crash of a Silicon Valley Bank and Signature Bank sent shock waves across markets in early March. In consequence, shares of banks collapsed and investors stoked fears that the Fed's aggressive monetary tightening would entail recession. On a Monday, shares of banks traded mixed. Shares of Credit Suisse listed on the US exchanges slumped by 53%, and in contrast, shares of UBS Group climbed by 3%. Shares of the US-based First Republic Bank sank by 47%. Of the S&P Global had downgraded its rank into junk status. Investors got to know reports on the extra fundraising. Despite the rescue deal worth $30 billion, shares of a New York Community surged by 31.7% after the bank's decision agreed to buy deposits and loans from a Signature Bank. PacWest shares closed 10.8% up after the bank stated that it had stemmed deposit withdrawals. Outside the banking sector, Amazon shares dropped by 1.3% on the next day following the announcement on another 9,000 job cuts. To sum up, all 11 sectors of the S&P 500 closed in the green and the volatility index went down. Today, futures on the US stock indexes extended the rally because investors were inspired about the rescue of Credit Suisse. Now, market participants are betting on a rate hike by 25 basis points in the outcome of the Fed's meeting. The takeover of Credit Suisse by Swiss rival UBS and move of major central banks to pump up liquidity is fears about broad-based contagion on the banking sector. Thus, Wall Street indexes regained their footing. Shares of the rescued regional lenders regained losses in the New York pre-market. Shares of a First Republic Bank leapt by 23.6%. Shares of a PacWest and the Western Alliance rebounded by 6.7% and 4.6% respectively. Shares of a top American banks such as the JP Morgan, Citigroup and the Bank of America rose by 0.7% and 1.4% before the opening bell. Now the market is riveted to the press conference of Jerome Powell rather than the Fed's policy decision. Investors will be looking for clues to the revised Fed's agenda for monetary policy. The regulator has to adjust its policy decision to the vulnerable financial sector, while inflation has got stuck way above the target level. Market fluctuations are in a common practice. However, the scale of recent wild moves of various assets alarmed even savvy traders and investors. Yields of US Treasuries have been growing for a second day straight because investors are taking a breather in the face of a looming bank crisis. Yields of 2-year Treasuries, which serve as a barometer of interest rate expectations, now stand at 4.04%. Investors will find clues to the economic health in the US existing home sales, which are due later today. The data will be of secondary importance. Unless compelling news is released, the stock market is set to sustain its bullish dynamic until Wednesday. Any worrisome news could be viewed as a precursor for a financial apocalypse. The US dollar index is set to trade under pressure before the Fed's policy meeting. It's clinging to the level of 103 points, though it's trading with a downward bias. If the instrument breaks the support of 102.9, it could decline to 102.5. Otherwise, the US dollar index could get stuck in a range between 102.9 and 103.5. The US dollar is trading steadily against its major rivals, and the euro is pushing the US dollar index down. The reason is the Federal Reserve's policy meeting and the puzzle about the Fed's stance on a further monetary policy. Yesterday, markets doubt that the Federal Reserve would raise interest rates this month. Now, 80% of market participants foresee a rate hike by 25 basis points this week. A highly volatile bond market mirrors the change in the market sentiment. Yields of 2-year Treasuries again topped 4% from a 3.63% on a Monday. The banking sector was on the verge of a collapse in the last 2 weeks. Such prospects will assure Fed's policymakers to make a well-rounded decision on the pace of rate hikes. Despite persistent pressure on the US dollar and the recovery in the oil prices, the loonie's advance is subdued. The USD CAD pair inched up by 0.03% to trade at 1.3660. The intraday corridor for the pair is seen between 1.3620 and 1.3720, and the loonie is wound down by the fresh inflation data released today. The CPI proved easing inflation pressure, which could convince the Bank of Canada's confidence to halt the cycle of a monetary tightening. The annual inflation rate in Canada declined to 5.2% in February from a 5.9% in January, and the red-hot CPI is the lowest since January 2022. And below the consensus of 5.4%, the CPI also inched down 2.4%. The data serves as evidence that the regulator has been on the right path to struggle against inflation. Bear in mind that the market is betting on a rate hike of 25 basis points by the US Fed. The gap between interest rates in the United States and Canada might widen, and this is bearish for the Canadian dollar. There is a good news to keep the loonie afloat. Today, oil prices are gaining ground. Of course, intraday growth cannot offset losses incurred for weeks. It means that the commodity-reliant loonie may gain bullish momentum. Oil prices rebounded today from the lowest levels in 15 months. Brent crude futures climbed by 1.6% to trade at $75 a barrel, and the WTI futures also appreciated by 1.6%. Meanwhile, Bitcoin is unwilling to leave the peak of $28,000. The flagship crypto is consolidating in the range between $27,500 and $28,200. The token is sticking to the upper border of the range, trading at about $28,100 or 0.2% higher. Popular altcoins are trading in the green in sync despite volatility on the crypto market. Bitcoin is able to sustain the upward bias. Nevertheless, the current turmoil in the global financial system is the main culprit of the recent rally in the cryptocurrencies. Traders are still cautious to open large bets in the crypto market ahead of the Fed's policy announcement. The central bank is widely expected to raise the official funds rate by 25 basis points, and this could put pressure on the crypto market. Currently, trading volume equals $41.4 billion. Bitcoin is likely to fluctuate within the borders of the trading range between $27,500 and $28,200. If the upper border is broken, the price may rise to $29,100. Make profits with the InstaForex and see you online tomorrow.